All right, what is up, tycoons? What's up, traders? Super excited for today's video. I have to give you guys an update on natural gas. Natural gas has been raging. Okay, we've been seeing UNG, we've been seeing boil popping, and we're seeing cold dropping. All right, so we're going to cover some of the recent news of why. All right, natural gas has really been, on this pop, and why the futures have been up sharply. And then we're going to break down the charts as well and give you guys a really nice detailed technical analysis. So make sure to smash that like button, subscribe to the channel if you guys are new. I'm dropping nat gas videos every single week, and you're not really going to find like a better, technical analysis and, update channel for natural gas. I'm covering all of the top news and everything. So, if you enjoy natural gas, this is definitely going to be a good channel for you. Let's go ahead and get straight into it. And natural gas futures are up sharply as the EIA reports a smaller than expected rise in U.S. natural gas supply. And the natural gas futures fly higher following surprisingly bullish storage results and cash prices ease. We can take a look at the weekly EIA lower 48 U.S. working natural gas and storage. All right, and that is really what's causing the rally right now, or at least that's what the news is saying, but what is behind the rally. My personal theory is that yes, we are seeing this lower, smaller than expected rise in natural gas supply, but the bears have been making such a killing and the shorts have been making such a killing, that we really could just be seeing a little bit of a short squeeze going on, right? We have a little bit of a bullish news cycle right now. And then we have a lot of, bears and shorts out there who have, up massively in profit. And why wouldn't they take profit eventually, right? So, it could be a combination of a little bit of a bullish news cycle combined with some shorts finally covering their positions and really accelerating the move up in natural gas. So, let's keep going moving forward. And we can take a look here. And this is the relationship of storage levels to NGI's weekly Henry Hub spot market price. We're actually going to break down the Henry Hub spot market price, all right, as well as natural gas futures, UNG, boil, and cold. But how to interpret this table, right? So the data in the reported statistics from the EIA section are released by the U.S. Energy Information Administration each Thursday at 10:30 a.m. Eastern. For more information on the EIA's methodology, please refer to EIA.gov. And the actual versus weekly storage estimates show the actual reported weekly EIA injection size withdrawal figure versus the range of estimates from market analysts surveyed by NGI. Now, I've been going over how it's injection season right now. Okay. And definitely watch that video, my video on the injection season right now. I'm really staying up to date with everything. I showed you guys the historical news and the historical facts around the month of April. It's been green 69% of the time, and let alone again this month in April, it was green again. But the blue line in this graph shows the difference between current working natural gas and storage versus the amount at this time last year, while the yellow line represents the current working storage gas level compared to its average from the comparable period over the previous 5 years as calculated by the EIA. The green line is the Henry Hub spot market price that appears in NGI's weekly gas price index. Okay. So that's breaking down the chart for you guys right here if you're not really familiar with what it is that you're looking at. Now, I am long natural gas. Okay. I don't have boil shares though, right? And I'm not out here trying to tell people to buy boil, to buy UNG or anything like that. I'm simply just covering this stuff because it's something that I'm interested in. Okay, my shares are up about 20% right now. And if you guys want to join the Discord, okay, the link is in the description. All right. It is priced that way for a reason. You can use the code Zachly, all lowercase ZACHLY, and that will get you a discount into the Discord. But it's a small group, and it's everybody's really focused and willing to learn in there. Natural gas is not the main thing we trade, though. Okay, it's a very small part of my portfolio. We trade many other things, such as SPX. We trade Tesla, Nvidia, different things like that. Okay, so enough about the Discord. We'll go ahead and get into the juicy stuff right now and go into the spot price. We're also going to take a look at KOLD. Okay, now KOLD to me looks the most bullish for natural gas right now. Okay, so I'm going to break that down for you guys. We're also going to take a look at boil right now and go over, some of the different strategies, right? When we break down the natural gas spot RSI and MACD signals, these are going to be the signals that I'm using on some of these other charts. Okay. This is UNG right here. We're going to take a look at the futures as well. This is the 4-hour chart on the futures and the monthly chart. So, we'll go ahead and get into it. But before we move any further, all right, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals on this YouTube channel are not registered financial advisors. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. Okay, so please be sure to read through the full disclaimer. We'll go ahead and get going in the video. And let's talk about these signals that I like to use, especially when it comes to, the spot price of natural gas. Okay. So specifically, I like to look at the RSI and the MACD, and these are very beginner friendly. Okay. The RSI is the relative strength index, and the MACD is your moving average convergence divergence. Now, you start to combine some of these things together, and you can spot potential entries and exits. Okay. So in this case right here, see how we're creating these lower lows, right? We have a low here and then a lower low, and we have a low and a higher low, okay? And this is on our RSI right here. Remember, the RSI is your relative strength index. So it's going to measure the relative strength of whatever it is you're looking at its given prices. And in this case, we get a divergence, okay? It's a very simple, easy to spot divergence where we're making lower lows, but we're making higher lows. So we're actually increasing in relative strength as the price is going lower. And sure enough, we see a strong move to the upside, right? Now, when you start to combine that with your MACD, what you're going to be looking for on the MACD is the red line crossing above the yellow line here, right? So if the red line crosses above the yellow line, that's typically known as an entry signal, okay? And so what in fact do we get? We get bullish divergence on the RSI. And then we get a MACD bullish crossover here, and we see a sharp move to the upside, right? And the same thing works for bearish divergence as well, okay? So here, we're putting in these higher highs, right? High, higher high, higher high. And then on the RSI, we have a high, lower highs. So we're actually losing relative strength as the price is going up, okay? So price is going up. RSI is going down, we're losing relative strength, and then look what happens here. We get a MACD crossover to the downside where the red line crosses below the yellow line, and that's an exit signal on the MACD. And sure enough, we see a sharp drop in the price. And this, these signals have really repeated themselves many times, over the past few years in natural gas, and especially on the natural gas spot price chart. Okay, we have lower lows here, we have higher lows, we get a MACD crossover, strong move to the upside. Okay, we have higher highs over here. We get a MACD crossover. We have bearish divergence. We see a big drop to the downside. And natural gas has really had a lot of my attention, not only because of the historic price levels that it's, been touching, but because we've had this bullish divergence forming for a while, guys. I mean, look, we've had bullish divergence forming since October of 2022, and we really haven't seen a strong move to the upside, right? We've seen little bounces each time we come and test the bullish divergence trend line, okay? So if you take a look, right, each time we come and hit the trend line, we get a slight bounce right over here as well. We get a slight bounce over here as well. We get a slight bounce in here, and we've really been moving, but we haven't gotten a big explosion. Okay. And the reason being is, gone are the times where the Russia-Ukraine war really was a shock to the market and sending shock waves to the market, and the market was overreacting one way, overreacting the next way. The market's pretty much got all of that stuff priced in. So unless something really, really new happens, we're not going to see these insane, 300% moves in natural gas. Okay. That's pretty much just a fact. Okay. So, BOIL is a leveraged ETF. KOLD is a leveraged ETF. So those are going to, if we do see dramatic moves, it's very possible for those to go up 100, 200 something percent. But again, that's because those are leveraged ETF and not, just the actual price. Okay. But we can see here back in 2022, the spot price of natural gas went from 330 all the way up to above $9. Huge move right there in the, in the spot price itself. Okay, so these are some of the strategies that I like to use and that we're going to go over in less detail on the rest of the charts because I just explained it to you guys right now. Okay. So let's move on to the next one. And KOLD, I mentioned, is looking bullish for natural gas. Okay, this is the bearish leveraged ETF for natural gas. And so we have this chart pattern here known as a rising wedge, indicated by these purple trend lines here. All right, and the red line is really tracking how the pattern should play out, right? In a perfect world scenario, what you're going to do is you're going to come back down to where the pattern began, and that could potentially take KOLD back to the $40 to $45 region. Okay. Now, currently, to me, it looks like we are due for a bounce in KOLD. Okay. And the reason being is because markets tend to move in 3-wave and 5-wave structures. And it's very clear that we've gotten a 1, 2, 3, 4, 5 here. Okay. So we've gotten a 5-wave structure. That's what we have here in white. All right. And typically, what you're going to see is an ABC correction after your 5-wave move has been completed. Okay. And so, it also correlates with breaking the trend line, right? So, we have our trend line here on the rising wedge. Typically, you get a breakdown, retest, and then a push lower, right? So that's why the red line right here is really tracking the pattern. And from, a count, from an Elliott wave theory, okay, this also is aligning pretty well right here, where we get a 1, 2, 3, 4, 5, and we look for, a small correction up towards the top of this trend line here. And then ultimately we would get another 5-wave impulsive move to the downside to finish out the pattern and take us back to that $40 to $45 region. So, we may see a little bit of bearishness in natural gas in the near term. Okay. In the very near term. Okay. But in the slightly longer near term, it does look like KOLD is going to continue dropping. And again, that is the bearish ETF. Okay. But it's not the only thing to consider. It's just one of the things to consider. Now, I mentioned bearish divergence, and that is something that we have here on the chart for KOLD. Take a look, we have these highs right here, right? And so we have higher highs and we have higher high over here. And then we actually have lower highs on the RSI. So we're seeing, a decrease in the relative strength, losing relative strength as price is actually going higher here. You combine that with a bearish chart pattern right here known as the rising wedge. And then what do you get? You get the third and final signal right here with the MACD crossing over to the downside. And, a really strong move that we've had downwards here in KOLD. I mean, this thing is at $58 at the time of this recording, and it was just up here in the high 80s at $88. So really, really dramatic move if you guys think about it. So exciting stuff to see. I know a lot of people are excited about the pump in natural gas right now, but you need to manage your risk very, very wisely. Okay, especially if you're going to be trading any of these leveraged ETFs. Things can turn sour on you in a second. I mean, KOLD is down 17% in one day, guys, just one day alone. A lot of people aren't ready for that type of volatility. Okay. Now let's take a look at BOIL. Okay. Now BOIL, same thing. We've been seeing lots of bullish divergence. We're seeing it on the MACD as well, right? So we have a low, lower low, lower low, lower low, right? And on the MACD, we see that we're trending upwards right now. Okay, so we're creating these higher lows on the MACD. We're pushing up on the MACD and also on the RSI, and it's provided good trading opportunities, right? Short-term trading opportunities, right? We have a low here, we create a lower low, and then look, we get that bounce up, right? We have a low and then a higher low. So, let me try to draw these a little bit of a different way, right? So, you see we have the low, or the lower low, then we have a low, we have a higher low, and what do we end up getting? Well, we end up getting a nice pop, right? And then what do? Well, we actually come back down, make a lower low, and then we retest that bullish divergence trend line, make a higher low again, and then we see a 28% pop in BOIL. All right. And then what do? We come down, we make a new low again, and we make another higher low, and really respecting the bullish divergence trend line. And we see a 44.5% move from the lows to the highs. Nobody's going to be a perfect trader and capture these things perfectly. But if you are looking for trading opportunities, these are some strategies that you guys can start to use and learn and start implementing yourself. But keep in mind, no strategy is going to be 100%, 100% of the time, right? It's just that simple, right? If it was that simple and, bullish divergence worked every single time, and anytime there was bullish divergence, you were going to 100% make profits, then we would all be billionaires, okay? And you wouldn't be watching this video because, you'd be swimming in so much money right now. All right. So definitely, just, keep some of these ideas and things that I'm saying in your head. We're going to move forward now and take a look at the UNG chart. And UNG very similar. Okay, we're making these lows, lower low, lower low, lower low, while creating these constant higher lows on the relative strength index right here. Again, it's been a really good trading opportunity, up 16% off the bullish divergence bounce over here, up 23% off the bullish divergence bounce over here. Now, one thing that was pretty significant in UNG was we actually broke through our major retracement levels here in yellow. We had to move down. We were looking to see if we were going to get a retracement and a continuation of the trend, and rather we were able to retrace, consolidate around here, and ultimately flip this area to support and push up higher. So if we do get a move back down in UNG, we really need to stay above 690 as well as 715 to have any chance of filling the gap up above $8 on UNG. There is a very small gap up to fill right here that we could fill in the short term if things continue to stay bullish. Okay, but remember, KOLD looks like it's ready and due for a bounce, and there's no guarantees. But if KOLD will go up, then typically you would see UNG and BOIL go down. So we want to see UNG hold above 690 or hold above 715 in case we do get a pullback in natural gas. Otherwise, we may try to continue that trend of continuing to make lower lows. All right. Now, this is the natural gas futures chart, specifically on the 4-hour time frame. Okay, and we have our major retracement levels here, the 61.8, 50, and 38.2. Let me dive into those a little bit deeper so you can understand why those are so important. Those are the 3 most common and well-respected Fibonacci retracement levels. Okay, and you use these to identify trend continuation versus reversals. Okay, and the reason being is nothing moves in a straight line down, nothing moves in a straight line up. You get a move down, retracement, continuation lower, or a move up, retracement, continuation higher. So you can use them to spot trend continuation, right? But you can also use them to spot reversals. So if you move up, retrace, and you start to consolidate and break through there, that's a downside reversal you can potentially spot. And if you move down, retrace, and you start to consolidate and break through those retracement levels, that's a potential upside reversal. So we've had these rising wedge patterns. We had one over here, right? And we ended up coming back down. We had one over here as well. We ended up coming back down. Okay, and we've had a really bearish move. And if we take our swing high and connect it to our swing low, we can see we had this large move down. And now we're retracing, okay? And we're looking to see, is this going to be nothing but a healthy retracement to continue the downtrend, right? Or are we potentially moving down and retracing? And we've been consolidating through here. We finally broke above our 61.8% retracement level. If we can flip this to support on the natural gas futures, there's this chance that we could actually get a reversal or retest our previous highs, if not create a high and then a higher high, which would be pretty bullish for BOIL or UNG and bearish for the KOLD ETF. All right, so same thing as the other charts, right? We've been seeing lots of bullish divergence forming. Okay, we have a low, higher low, higher low, higher low, right? And on the price of the actual stock, right, we have a low, we have a lower low, we have a lower low, we have a lower low. So we're creating all of these lower lows, and we're finally seeing the follow through on the futures chart and getting that nice move up, that we've been really waiting for, and a lot of people have been waiting for. Okay. Now, this is the monthly chart. So, the reason I'm showing you guys the futures is because BOIL, UNG, KOLD, all of these things, they're going to be reflected off of the prices of the futures. Okay. If you didn't know. And one thing and one reason that they, suffer from a lot of decay in particular is because if future prices aren't moving up, oftentimes they get stuck in contango, right? And so what happens is each month they're having to roll their contracts out and essentially sell close expiration futures contracts that are about to expire very soon, and then buy further out futures contracts, right? And so the way that futures contracts works is the closer to expiration, typically the less expensive those are going to be, right? And the farther out in time you go on a futures contract, the more expensive it can be. So if natural gas is moving sideways and the futures aren't really going up, and natural gas futures are really just going sideways or even down, BOIL and UNG, they get stuck in this tough position where they're having to sell cheaper future contracts and buy more expensive future contracts over and over and over again. and it's really not beneficial. Okay, so you definitely have to keep that in mind. That's one of the risks associated with trying to invest in UNG or BOIL. Right now, when it comes to the monthly chart, what I'm looking at are some major demand and supply zones. Okay, that everything else in between is really just noise. Okay, ultimately, we have this very long-term demand zone. Multiple times in the past, we've stepped up and tested this zone, and we've seen buyers come in and really push price higher. We have our overhead supply zone that, we're not even there yet, right? So we're still heading towards that supply zone. Last time we entered into that supply zone, after we came down, we did end up selling off again, right? If we zoom back into that 4-hour chart, these are those supply and demand zones, right? And we see that we've been seeing strong demand every single time that we step into our demand zones, right? We see over here, buyers immediately step in, push price higher, right? Buyers step in, push price higher. We come back down, buyers step in, push price higher. And we have not retested it here as of recently. We're going to look to see if we can retest our supply zone. And rather than, seeing a sharp sell-off, what we would look for preferably, right, if you're looking to be long in natural gas, is you would want to see price come up here and consolidate in this region and really start to absorb these prices to have any chance of moving higher ultimately in natural gas. Okay, so that's pretty much today's breakdown. Okay, we went over the monthly chart, we went over the 4-hour chart for futures, we broke down KOLD, we broke down BOIL, UNG. We also went over, some of the news cycle right now that they're trying to pump into the market. Okay, hopefully you guys enjoyed this video. If you did, please smash that like button, subscribe to the channel. It really helps out. And thank you guys for watching. Okay.